This video is brought to you by Holocasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description.
Hello and welcome everyone to our 131st session of Holocasa. My name is Michael and today I'm talking to Chris Seveney from Washington, D.C. Chris is a seasoned real estate investor and fund manager with a rich history of building, managing, and transforming the real estate landscape and investment landscape, you can say. Chris, I'm really pumped to have you on the show. Why don't you introduce yourself to your audience? I'm sure you do it much better than I am.
Well, first, Michael, thanks for having me on today. Yes, I am Chris Seveney with 7E Investments. I get asked a lot, how did I come up with my little logo, the number 7 and the letter E, and I joke, it's just my name, shortened. But yes, I have been a diehard real estate investor or been in real estate since I graduated college. And to age myself, that was in the late 90s. So kind of, the gray hairs on my head have come from being, in real estate, I think primarily, not having 2 kids. So today what I do is, it's very different than what I started out doing. Today, I run a mortgage note fund, and we invest in defaulted mortgages here in the United States. And what we like to say is a lot of people like to fix and flip houses. We use the term we fix and flip mortgages by buying loans where borrowers are behind. We work with them to get them on new payment plans. And then once we repair their credit, we'll turn around and sell that loan. So,
let's start from the scratch. What made you in the end start in real estate when you were in college? What was it?
So I went to college for civil engineering, which it was an all engineering school. And the joke at college was, civil engineers are the dumbest engineers. All you have to do is learn that you can't push on a rope and dirt and water equal mud. So that's all you need, people, if you want a civil engineering degree. But what really enticed me to real estate was, the engineering side. I first thought, oh, I want to design some cool buildings. And then I realized sitting in an office all day long, just designing something isn't my cup of tea. So I ended up, basically moving into the construction management side of civil engineering. So when I graduated college, I worked for a large general contractor, and we were building some really cool projects, throughout my career working for them. So that's how I got started in real estate. And then I got burnt out after about 10 years of doing that, actually 15 years, because you're working 6 days a week, you're working, 60 plus hours a week, and starting a family and trying to build your own portfolio was super challenging. And I ended up leaving that side of the space to go over to what everyone would say the dark side when you're on that side, with the Star Wars reference, which is I went and worked for a developer. And working for a developer, it's completely opposite where, contracting, when you're as a contractor, you're just thinking, let me get the project done. We want to make money. When you're a developer, it's much more entrepreneurial because you're owning something and you're probably going to hold it for a long period of time. So there's a lot more risk, a lot more thought process, and it's a lot more entrepreneurial by doing that. And that is what really spurred me working for the developer to, over time, which did still take me another 7-8 years doing that till I wanted to decide, hey, I'm going to go out on my own.
Now, flash forward. You have a huge portfolio of assets. How did you basically build it up over time? And how do you define your success story? And also maybe a secret sauce there.
For us, my success, when I look back at what's made me successful, is understanding risk and risk mitigation. Anytime you're an entrepreneur, preservation of capital and managing risk, I think is priority number 1. Along with that, that leads to, you grow I'd say grow wisely or, smart, whatever the term is. I see people sometimes jump from one unit to then I want to buy 100-unit apartment building. Investing in life is a marathon, not a sprint. And you have to understand, take it slow. Make sure, you want to walk before you run is one of the lessons that I've always followed, because I've worked for some companies that tried to go from 0 to 100. And these were large companies and they failed miserably. There was one that was a real estate development company that I was working for at the time, and they were doing some small multifamily buildings in rural areas. And then they wanted to buy more like bigger buildings in the city. They tried that, failed miserably because they didn't have a plan. And the other thing that I think is really important for everybody in real estate is your ego and putting it in check. I used to think I could do it all. I could do everything. I could raise money. I could manage assets. You name it. I'm like, I can do this. I'm going to do it all by myself. The reality is you're better off, just like any sport, having a team and having, a team that is, people are good at their position. Let's take, let's take soccer, as an example that, you could be a great forward, but you're probably not a great goalie. So why are you going to go play goalie? You need somebody who's a good goalie to put in there. And that's what I realized that really expanded my business was we brought on my business partner, Lauren, who helped us on the capital raise side. And then our business has grown 25x since I brought her on board.
It's very interesting that you say that. And it's one part is trying to make everything on your own, then you are not able to grow. On the other hand, it's people then going for LPs and basically doing it with each investment vehicle. You basically do a little bit of both, correct? You have your team, but you also, do I understand it correctly, that everyone is in the end who is investing with you is becoming an LP? If not, how is basically there the investment vehicle structured?
Yeah, we kept it very simple. And, our company is a GP. It's myself, and we have 7 employees, 7 others. And we have about over 700 investors. Each investor is an LP. So each investor has invested in the entity that I work for, but also owns the assets. So we don't have all these special purpose vehicles. And I'm an investor too. And I've looked at some investment strategies or some investments. I can't figure out what I'm actually investing in or who I'm investing with. And to me, that's a red flag. So we try and keep things very clean, very simple. When I started out with, 8 years ago, building my portfolio, I was trying to think I was going to be creative and have, these multiple entities and do things a certain way and think it's cool doing it. All it does is it costs you money from taxes and corporate entities, and just leads to headaches. It just adds more work for you.
And
I tell
confusion
people,
for the potential buyer investor as well, correct?
yeah, it's keep it simple. Just keep it simple.
For me, please allow me this ignorant question. A mortgage note, I'm not US American. What is it exactly? And also the next follow-up question would be, can also international investors invest along with you or with you?
So I'll answer the second one because that's much quicker. Yes, international investors can invest in our fund. It's through what's called the Regulation A process here in the US, which not many people do, but it only has a $5,000 minimum US dollars. So it's much lower cost than some of the other options people have seen in real estate that might have 50 or 100,000. So a mortgage note, and this is what's interesting because I got upset when I found out you could do this. And I had been in real estate over 20 years. So here in the United States, housing, the average house price, I think today is around like 400,000 US dollars. Now, most people don't have $400,000 sitting in cash. So they will, go to a bank and they will get a loan by the bank. and the bank will give them a loan, but use that home as collateral or secure that home. So if you stop paying, unlike a credit card, you don't pay your credit card bill, there's nothing they can really come after you for. I mean, it's great. I went out to eat at a restaurant, or they're not going to come take that brand new TV off your wall. With a mortgage is basically a document that ties that property to the bank. So if the borrower stops paying, the bank can go get that property. So I'll just use you, Michael. You buy a house in Washington, D.C. for $400,000. Say you put $100,000 down. So you owe the bank $300,000, and you have to pay that bank every month. Let's say, unfortunately, you have a job loss and you can't pay your mortgage. The banks will typically do one of two things. They will try and work with you to get you paying again, but banks here in the United States aren't really built to deal with this scenario. Banks want to lend. They don't want to be negotiators or deal with real estate. So what happens a lot of times is those banks will sell that loan. So I would come in and buy that loan, but what makes it better for us is the bank knows that that loan is in distress. So when something is in distress, what happens? It sells at a discount. So I might pay, let's say, $200,000 for your loan where now I would step in and replace the bank. You still owe me $300,000, but I bought it for $200,000. So what I try and do is say, Michael, you're a year behind. How about you give me $5,000 down and just start making payments again to get you back on track? Because I also don't want your house. And you start doing that. Then after 6 or 12 months, now that I quote rehabbed you in the sense of you're back paying again, I might be able to turn around and sell that to another lender for say $250,000 because I've improved the value, because I've improved the payments coming in the door. So it's something.
The owner then in the end does sell the house.
Eventually.
Okay.
Eventually, but during this whole time, I don't own the house. I'm just the bank. But sometimes I may hold it. And if you sell the house, then you owe me, say you owe 300, then I get the full 300. So, the average homeowner in the United States keeps their house for about 7 years. So that's the other component to it, is we can hold these for several years and see if you sell the property. The other thing people do is what's called a refinance. Interest rates here in the US are high. If they go back down, what do people do? They refinance, and then they pay off that first lender to get a new lender. And all we do is we're just stepping in the shoes of the bank. Most people think banks own all their mortgages here in the United States. Banks own only like 30 or 40%. Most of it's owned by Wall Street and other types of funds.
Let's go a bit more technical, actually, because it's interesting regarding the process and who are your main stakeholders and who are you talking to and how do you get those deals? Is it that you have direct partnerships or direct contacts with the banks? Are they saying, hey, like Michael, you're in distress, please talk to Chris and other Chris's, because obviously they probably have to be a little bit equal? Or is it that you do your own marketing and you have your own sales strategy regarding this one?
Yeah, it's your own marketing and sales strategy. And it's interesting because it's a very small niche type market. Like any type of business that people probably work for, you realize like there's 5 major companies and like the same people just go from company to company. Similar in this space. I mean, it's bigger because, the US mortgage market's $13 trillion. But what we see is, and what happens is all the banks and all the large players, what they do is everything gets aggregated. And it's very similar to companies. If somebody's trying to sell a company, there's companies out there that specifically deal with that. They're called M&A, merger and acquisition companies. It's the same thing. Those companies have a division that deals with banks and lenders to sell loans. So, like one of the big ones here is a company called Rams, and they get, 50 different banks send them all their loans to sell because the banks don't know who to go to. The banks don't want to deal with it. And the interesting thing is when they go to this aggregator, the banks don't pay them to do this. We as the buyer pay a fee when we buy it, like a broker fee or a commission to them. So if you're a bank, if you think about it, I can have somebody manage this and do this all for free, then why wouldn't I do it? Because we as the individual pay like a 1% commission, so it's not huge money. So it's really just building the relationships with those types of companies to make sure there's that trust factor. Because one thing people have to realize is, when you're dealing in mortgage and lending space, the information we see is, we see your name, we see your social security number, we see your credit report, we see everything. So you can't just take this information and give it to anybody. They do thorough background checks to make sure, hey, this is a legitimate company. And, we have to sign lots of non-disclosures and what we do with this information. But, it's real sensitive information.
I might not have I might not have listened well before, and I still dare to ask: is that those companies? They are federal, they are public companies, or they are private companies, and they somehow have a tactic or a strategy or a way to get this information?
Yep, they're private, and most of them are. So typically, the way the players are in the space, a lot of the loans, like where people make their payments, are again one big conglomerate of specific companies that collect like all the payments that are all again private companies. And a lot of times it's those companies do a spin-off of the bank, so it's just like another division. So it's like, hey, it's companies already in the space that already have the relationships and connections that are private that, the government stays pretty much completely out of all of this. The only place the government steps in is for licensing. And that's usually on a state level where each state makes sure you have the proper licenses to do business, just like an attorney needs a license or a doctor needs a license.
Makes sense. Do you then also do your own due diligence afterwards? And how does it work? Basically, you go listing by listing or case by case, and you then definitely yourself decide if you want to invest or not?
Yeah, great question. So it's kind of comical because it's really old school. And what we'll get is they use the term a tape, which is it's a glorified Excel spreadsheet that will have, let's say, 100 properties on it. And then we can pick and choose typically to go after which ones we want to go after. And then it's, very similar like buying a home where, okay, you put an offer in on one of those loans. They come back and tell you, okay, it's accepted, or, negotiate. And then that's where you really start your due diligence. And just like if you're buying a home, you inspect the property, they make sure like you're the right owner, stuff. Very similar, but we can't like inspect the home. Like I can't knock on your door and say, hey, I'm going to buy your loan, let me in. But we can send somebody by to take a picture of the outside to make sure. I've seen homes that were burned down. I've seen homes that weren't there. I've seen homes that had, trash all in the front yard. Crazy stories we could share. But yeah, the due diligence we do internally, and the three things we focus on, we call it the 3 Ps. The property, like what's a property look like? The title of the property, meaning, is this person have other loans on the property? Are there other loans that are in front of ours that would get paid before ours? That's important to know. The person in regards to, does this person have a criminal history? What's their background? And then like the predicament. Typically, most people don't wake up saying, I'm not going to pay my mortgage today. Usually it's death, disability, job loss, or divorce. And understand, and we get to see all the comments for the conversations they've had with people to say, okay, is this somebody that we think we can work with to try and get them on a new payment plan? If the person's deceased, probably not going to get them paying anymore. And that would be a foreclosure of the property, which is usually something we really don't want to do. So it's an extensive due diligence process that takes about 2 weeks.
Now, from the investor side, what's the process there? What I can imagine if I decide to invest in you and with you.
Yeah, again, back to what I mentioned earlier about keeping it simple. So we have, online on our website, you can go into our website, invest directly on our website. It brings you to a page through our broker dealer. So we use a FINRA licensed broker dealer that you can go in, you fill out the form, fill out the information online. If you're paying via ACH, you could ACH the money at right that point in time, or you can, select wire or mail a check in and then just do that process. And, today is, the end of September. So if you invested by the end of this month, we pay monthly distributions. So your distribution would start accruing on October 1st, and then you should receive your first distribution on November 1st. And then you get set up in a portal where you can track your investment. Our investor relations team is 100% in-house. So it's not, if you call, ask a question, it's not a call center that will take a week to get back to you. And we send out a weekly newsletter to investors, updating them on case studies and just, what we have going on. So transparency and communication are huge for us.
It's very impressive. I looked at your website prior to our call, and I've never seen that, to be honest. This amazing, easy investment process where, as you say, like you literally click through and basically start a subscription. Is that also possible? Because I saw on the table that up to $1 million US you can invest. Can I also then, I didn't go through the entire process, but can I then also go online that high?
So to invest like anything over 100,000 has to be sent by a wire. So we will not let you. So we use what's called an escrow company. So the money actually doesn't come right into our bank account. It goes to a third party, like escrow kind of company, which is like a bank. So they're the ones that receive all the funds first. And you're correct. Anything over 100,000, a bank will not let you send. You'd actually have to call that escrow company and set up a wire with them to wire the money to them.
Okay, makes sense. Yeah. Chris, I really appreciate the conversation with you. I learned a lot. You gave me an interesting insight regarding mortgage note investing. Also, that you found this loophole, but this idea after various years of working in real estate, and also a very nice motivational fact to say, no, I don't want to work for someone else doing something which actually makes me work harder and I have less benefits of it. And I think you have nailed it regarding creating a very strong foundation with your team, creating a very easy to understand product, making it accessible to many people, even worldwide, and therefore also in the end helping people in a distressed situation, making it for them more or easier to get out of it, and also giving them like maybe a second chance later on. Being basically like an intermediary vehicle between the bank and also the real estate owner. Chris, is there anything as a conclusion and final thoughts? Is there anything you would like to share with the audience which we haven't mentioned?
For people who listen, the one thing that I just like to share with people is kind of what I mentioned earlier. No matter what it is you're trying to accomplish in life and the goals you have, set a goal, map out the roadmap of how to get there, but just understand you just don't go from, step A to the finish line. It's a lot of hard work, a lot of effort. Every one of us who goes on this journey, at some point in time, questions whether they can do it, questions whether they should quit. But the only difference between the person who stops doing it and a person who keeps doing it is the person who keeps doing it just gets up one more time than the other person. Sometimes people just get knocked down and don't get up. People keep doing it, just when they get knocked down, keep getting up. So I just tell people, hold your head high and keep getting up.
Amazing. Yeah. Very good. How can people reach out to you?
Yeah. So they can go to our website, 7einvestments.com. That's the number 7, the letter E, then the word investments.com. Or you can email me, chris@7einvestments.com. Probably the best way. You can also look me up on LinkedIn as well. Thankfully, my name is not very common, so there's only one other of me out there. So, just gonna pick the one who's better looking, and then you'll have me. That's all,
Perfect. I'll also put those.
This video is brought to you by Holocasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description.